Okay, my beautiful friends, here we are. Sit back and relax because we're going to have some fun as always. So this is my newest segment of Markets, a look ahead. It is Sunday, April 30th, 2023. Just real quick, have you noticed, those of you that may be as old as I am, as you get older, time just seems to pass faster. I think this is a phenomenon known as the quickening. How many of you heard of that? I've heard of it in the past. I don't know much about it, but maybe you do. So enlighten Greg Mannarino a little bit. But seriously, I cannot believe how fast time goes by the older I get. It's just crazy. All right, look, with that said, I'm a little off from time to time. Let's talk about this thing that's going on around us here. In my view, and I would believe most of you would have to agree, especially those of you that follow the markets and follow the economy here, never before ever in my quickening life have I seen a greater disconnect between a world economy and the world markets. The gap here is just, it's so big, it's very difficult to get your head around. What do we got going on? A world economy that is, it's cratering at its fastest pace in history. What else can I say about that? It's just a phenomenon that is going on mostly because of actions of central banks who have created this environment here by pumping cash into the system, going on now since the last meltdown, at its fastest pace, at their fastest pace ever in history. It's astonishing to me, and it should probably be to you too. We're not allowed to have a real market anymore. Central banks obviously have a much grander plan in mind. They have taken what used to be more or less a free market and a free market economy around the world for the most part here, and twisted it into some other kind of yet to be defined thing. I mean, it's an astonishing phenomenon, and it's created this gap between the world economies and the markets. And as I have said forever, that gap is going to close at one point here. Obviously, the economy is going to pick up. The economy is going to continue to free fall, so the market must come down to meet what the economy is doing here. There was a time here when stock markets of the world did reflect what was going on in the economy, no more at all. When you have this kind of phenomenon of suppressed rates, which we're still getting, are you watching the bond market? It's again very erratic, moving all over the place here. Towards the end of last week, we watched bond yields drop. That certainly put a spark underneath the stock market here. That mechanism, look, it's going to get real at one point. When? Who really honestly knows here? It's just insane, in my view, to watch the action here in the debt market, which gets virtually no coverage on the mainstream. None. All they talk about is the Dow Jones Industrial Average, the Dow Jones Industrial Average. Lately, it's been the NASDAQ because tech earnings coming in here. We have multiple issues going on here with regard to the markets here. We were told that the banking issues were fixed. So obviously they're not. The regional banks, smaller banks, they're just done here as they get consolidated. You all know this. We talk about it all the time. The Fed is moving towards their new monetary system, which you and I have known about for about a decade. We've talked about it. It's coming, a new paradigm, a new set of rules. How many times have you heard me say that over the years? Thousands and thousands, and we're definitely marching towards that kind of a situation here. But anyway, that's where we stand here in a completely fake, fabricated, out of touch with reality market environment. And again, in my view, and I've been talking about this for weeks, there's a black freaking hole underneath the stock market. Will the market finally normalize a little bit here? Now look, I am not, no, joining the choir of crash callers out here. They're going to be right. Believe me, the choir of crash callers they're going to be correct. And it's going to be an event that's going to shake the foundation of the world. That's how extreme this is going to be at one point. But it's very difficult, believe me, I know, for the market to drop when you have a situation where central banks are keeping rates suppressed. What does it do? When central banks suppress rates, okay, although they're raising rates, they're doing this because they want to control inflation. You know that. Totally false. Okay, we understand what's really going on here. But that mechanism does force cash into the stock market. Believe me, I know that. I also, most of you know, last Tuesday I took up a short position against ticker SPY. What most of you are losing sight of is for how many, I don't know, many months, a year or so, I've been building up a large, long position in ticker JEPI, which I still own, which I'm not selling my shares, any shares of JEPI for many years. So net, Greg Mannarino, though I am short one thing, I am net long the market. It's insane to me. I short one thing and people lose their minds. They don't know what to do with themselves. A lot of people, look at the comments. I mean, I know most of you get it out here. So, but look, I still remain, as crazy as this may sound, bullish here in the market, at least for now. But I do anticipate, I'm anticipating a small correction here in the market, 5%, 6%, 7%. We'll see how that plays out. Again, I just opened this trade on Tuesday. Market dropped on Tuesday. Market dropped on Wednesday, Thursday, and Friday. Extreme rebound off of that. But again, I bought these puts. They don't expire until freaking August. So I got a really long time to allow this to play out. And we'll see if it works. Look, I wrote a piece yesterday and I put it out in my free newsletter about how to make heads or tails of the VIX, or the volatility index here. Check your email box if you subscribe to my newsletter, link in the description of this video. It goes over two things. Right now, the VIX is at a 52-week low. There's an old adage on Wall Street that goes, when the VIX is high, it's time to buy. When the VIX is low, look out below. All right. These things don't guarantee an outcome. All right. I'm just throwing these little tidbits of information out for all of you. Anyway, with all this aside, blah, 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 let's talk about what we have to anticipate this week. It's huge. We got the Federal Reserve freak show this week. What's going to happen? Look, I believe firmly the Fed is going to raise rates. I know many of you don't believe that, and you're not alone. I mean, if you look at the general consensus here, even on the mainstream, the so-called professional people over there, they're split pretty much down the middle as to what the Fed is going to do this week. I can't see a way that they're not going to raise rates small, 25 basis points, 50 going absolutely crazy, but I don't think so. I think it's more like a 25 basis point hike. This is going to be on Wednesday. And that, it's not even so much what the Fed does with regard to raising rates. It's what comes out of its mouth. It is going to talk. Powell, Yellowstone, the thing, whatever it is, yet to be defined. He's going to start talking about whatever he's going to talk about. And that's what's really going to move the market one way or the other, higher or lower. We'll see. Again, I am in the camp, firmly actually, in the camp that the Fed is going to raise rates. Why? The Fed's favorite inflation indicator, is PCE. The personal consumption expenditures is going up high. In fact, we saw a spike as of late here. The Fed's going to look at that, and I feel like this, and I want to hear from you. We already understand the Federal Reserve has zero credibility, transitory, temporary with regard to inflation. They never get it right. Or do they? I mean, the Fed tells you to look one way when you really should be looking in the opposite direction. This is the game they play all the time. You know that. So whatever comes out of the mouth of a Fed president or the Fed chair, you got to really realize what's going on underneath it. This is a criminal organization of the highest order, public enemy number one, deliberately destroying the world economy, central banks collectively, wiping out an entire class of people. They have no intention whatsoever, really, despite the fact that they've been raising rates and raising rates and raising rates to control inflation. Their job is to inflate, not deflate. A central bank's power resides in only one thing, people. You know what I'm going to tell you. Their ability to inflate. The more a central bank inflates or is called on to inflate, well, the stronger they become. That's how it works. It's a twisted system. We have this debt-based economic model that is a curse upon the earth. You all know that. We're never going to get away from it. I know how many of you are looking for some kind of a saving grace. It ain't happening. Just get used to it. Anyway, so that's the biggest thing this week is the Federal Reserve. We're also going to get a whole bunch more earnings that are going to be coming in. And then, of course, we got the banking issue here. It's not done. Okay, they want you to believe it's done. And we had Powell, the Fed chair again, telling us, I believe it was Friday. He said the banking system is sound. When you hear these things, when Greg Mannarino hears these kinds of things, I think the polar opposite is more than likely true. Okay, we understand that the banking system operates, the entire financial system operates in a perpetual deficit. That's how it works. It's a debt-based model. It must constantly find reasons to create cash out of thin air and pump the system full of it as we all work to borrow. Do you realize when you're working, I'm going to outline this a little different way. I've told all of you since forever that the bills in your pocket and in your bank account, they're not yours. They're owned by the issuing central bank, and we owe them back to the issuing central bank plus interest they create out of thin air, but it's worse than that. The reality is we work to borrow those bills in whatever form from the central bank. But we work to borrow those bills, and then we, of course, owe them back because we borrow them to the central bank. So it's not just a matter of we're working for a product that we don't own. We're working to borrow a product from central banks. That's how they control the system. You understand? It's the most twisted thing in the world. Anyway, so I was just writing a few things down here. Look at my handwriting. It's pretty awful. Anyway, so I wrote right at the top here, I wrote black hole market. Yeah, there's still a black hole into this market. We'll see how it plays out. Look at the VIX, as I said. Bond yields are dropped as of late, and the Fed is pumping the market along with other central banks to keep rates low. Global productivity is in a nosedive. I mean, we all know this. Factories are shutting down all over the world, not just here in the United States. Trade deficits are at nightmare-freaking proportions, and economies of the world are in a lot of trouble. I mean, this is stuff I was just writing down, drinking my coffee this morning. Consumers are getting crushed. Inflation continues to rise by their own numbers. Make this stuff up. And then I underlined here. Can you see that? Breaking point. Breaking point. There's going to be a breaking point, and we may be hitting that. What was the secret that they let us know Thursday or Friday? That the consumer is maxed out. We already know that already. They continue to borrow. Savings rate in the negative. 73% of millennials living paycheck to paycheck. 53 or 58. I think it's 58% of working Americans living paycheck to paycheck as well. Can't make this stuff up. It's impossible to do. But they want us to, especially, with the Joe Biden-Stein mummy man re-election campaign out here telling us how great we're doing, how rich we are, how incredible our economy is. You can't make that up too. Again, that's how dumbed down people are. But, they're gonna play off of that. People today, American citizens today, collectively are carrying their highest debt burden ever. Again, and the consumer spending, which is 70% of the economy. 70% of the economy is dependent on consumers going out there and spending. Henceforth, why you got people like Jamie Dimon, Wall Street Superbank CEO, JP Morgan, telling people, oh, don't worry, we're willing to lend you even more, whatever you want. We're going to lend and lend and lend. Yeah, again, you'll never hear a CEO of any bank, forget about a super bank, tell you that you shouldn't be borrowing. They want you to borrow. They need you to borrow. Henceforth, why these banks are reporting better earnings than they expected, because people are, at least as of now, able to pay back for the most part whatever they owe on these freaking credit cards here with unbelievable rates. You can't make this stuff up here. But again, we got banks here that they're still in trouble here. You remember over 8 months ago? No deposits, no loans, no deals? Well, There's no loans and no deals. They're getting the deposits now from the smaller institutions, which are being destroyed by design, taken down brick by brick. And then you got the other issue here. The liabilities on these institutions' books puts them all in the negative. In the negative here. Can't make it up. You can't make up this situation if you tried to. If you were writing a science fiction novel, it's impossible. But we're ahead of the curve. So what are we going to do, you and me? We're going to keep our eyes open. We're going to first of all, if you are one of my lions out here, one of my people that follow my work here, I really think net, we need to remain long. I know how sick this sounds, okay? If you feel like taking up a short position against the S&P 500 in the short run like I just did, I get it. It looks like this market is about to fall. But net, we need to remain long until one thing occurs. Just one. I will, with regard to my being net long the market, I have what I would consider a relatively no, it's a large position in JEPI, okay? However you want to look at it. I own a lot of this stuff. I will remain net long this market until one thing happens. One. Do you know where I'm going with this? When I see bond yields start to rise in an uncontrolled fashion, bang, 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 which we've witnessed several times by looking at the Mannarino Market Risk Indicator, MMRI, link in the description of this video. Once we start seeing that, that's when we know the big one is about to hit. The big one is about to hit when we get a meltdown in the debt. Until that time, markets are going to waver around. That's what they do. And an enormous effort going into keeping rates suppressed at this point. But it's not going to last, and it's going to come apart by design. Central banks are going to let it go. They need to take down the current system. They need to take it down so they can institute their new one. It should make sense to you. At least I hope it does. All right. So for me, I'm going to remain net long this market, as I just said, until I see the meltdown in the debt market, because that's going to be the moment here that we've all been waiting for. Forget about the stock market. Like I said, they want you focused on this day. The mainstream propaganda ministry wants you focused on the Dow Jones Industrial Average. That's all they want you to look at here. Well, you and I are smart enough to look at the drivers of the market, which is the debt market, the relative strength of the dollar, even where crude oil is going. There's a driver here. Crude is taking a hit as of late, but energy, commodities, people, that's the place to be moving forward. You know all this. I cover this stuff to the point of insanity all the time. I don't think there's another group of people, really honestly, that have a better understanding of the market than you do. We got this thing going here. This is not just Greg Mannarino's little gig here. This is our thing. And that's why I look so forward to hearing from you. I do read through the comments here. So please do comment. Please, if you think this video has been important, did you get anything out of this video? That thumbs up is so valuable. Like I said, it gets the video seen. YouTube says, hey, people like this video. We're going to show it. So please, that thumbs up. I really do count on that. All right, people, I think that's it. I've covered so much in this video. It's almost freaking 18 minutes right now. I will see all of you in the morning. We'll sum all this up. We'll see where this is going to go. I'm looking forward to this week. It's going to be interesting with the Federal Reserve. I hate the Federal Reserve. They're going to talk. It's going to talk. Blah, 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 blah. I wish I could just once. All right. Love all you guys and girls. I'll see you in the morning.